U.S. taxpayers take on trillions of dollars in new risk. The federal takeover of mortgage giants Freddie-Mac and Fannie-Mae, announced on Sunday, is a very bold attempt to stabilize financial markets and restore the faltering housing market. But it puts trillions of dollars of risk directly onto taxpayers' shoulders. You can call it a bailout, you can call it a safety net, or you can call it a rescue package at taxpayers' expense. This is a very risky move. But the bottom line is, the American taxpayer is left footing the bill. At a Sunday morning news conference, Treasury Secretary Henry Paulson and James Lockhart, director of the newly formed Federal Housing Finance Agency, FHFA, has announced that Fannie Mae, based in Washington, D.C., and Freddie-Mac, based in McLean, Virginia, will begin operating immediately under a federal government conservatorship. And unlike a receivership, the arrangement leaves hope for shareholders that investments may regain some value, theoretically, supposedly. Supposedly, the plan is supposed to settle the bond market, and supposedly borrowers may find mortgages at slightly lower rates than otherwise, but that's not really the problem. It's the overpriced houses. They cost too much. In taking over the companies, the government ousted their CEOs, but otherwise work continues as normal. Though the companies haven't been at imminent risk of collapse, very deep losses from the housing meltdown have raised new concerns from investors around the world about their ability to meet financial commitments. The market's initial reaction will be that things are in worse shape than people thought. They keep peeling back a little more of the onion and finding there's more rotten inside, perhaps rotted to the core. I have determined that the companies cannot continue to operate safely and soundly and fulfill their critical task or mission without significant action to address our concerns, Lockhart says. Freddie-Mac and Fannie Mae combined own or guarantee at least $5.4 trillion in outstanding mortgage debt. The government's decision to place both agencies into a conservatorship, in essence, taking on responsibility for that debt by wresting control from the government-chartered corporations, is a historic move, a very risky move. It is still uncertain how much capital the agencies may need from the government. What that means to taxpayers ultimately depends on what happens with the faltering housing market. So, what happens if it gets worse? Well, yes, taxpayers could be responsible for trillions of dollars of more debt. Somehow, it just doesn't sound that good of a deal for the taxpayers, does it? To the extent homeowners continue to make timely mortgage payments, pressure on the government is lessened, supposedly. Continued foreclosures and troubles in the mortgage market could carry on, or could carry a very expensive tab. The Mortgage Bankers Association has reported on Friday that more than 4 million homeowners, or 9% of those with mortgages, were delinquent by at least one payment or in foreclosure at the end of June. It is the highest rate ever, the MBA says. Terms of the government takeover call for drastically reducing, over time, theoretically, the roles that Freddie-Mac and Fannie Mae play in the mortgage market. Yes, that could take a long time. And that's also on condition of all goes well. Government officials say the duration of the conservatorship is indefinite. And Paulson said policymakers need to use the time to decide whether the role of the companies is best played by private corporations, the government, or hybrids of some kind, such as Fannie-Mae or Freddie-Mac. Something's not right with this whole picture. Government purchase of mortgage-backed securities. Initially, the government will spend at least $5 billion to buy the securities to demonstrate Treasury support for continued mortgage availability. A new lending program. The companies will have access to a new line of government credit if they run into serious trouble borrowing funds on the open market. Treasury officials say they consider it a symbolic step to provide confidence to investors in Fannie and Freddie debt. A closer look. The move to put Freddie and Fannie into conservatorship was triggered in part by closer government scrutiny of the agencies prompted by the July housing legislation. Based on what we have learned about these institutions over the past 4 weeks, including what we learned about their capital requirements, and given the financial markets today, I concluded that it would not have been in the best interest of the taxpayers for the Treasury to simply make an equity investment in these enterprises in their current form, Paulson says. Lack of confidence in the agencies has meant that to build capital, Fannie Mae and Freddie Mac have had to pay more for borrowing in the bond market and have had to tighten credit standards. Effectively, this is nationalization. How many businesses or firms or corporations can the government take over? How many? An economist at the California State University has warned that the government's financial standing could get shakier, much shakier. The U.S. government has trillions and trillions of dollars of debt outstanding. With the takeover of Fannie and Freddie, the government will add trillions more to the burden because the Treasury will in fact guarantee all the Fannie and Freddie debt, he said. This doesn't sound too good in some kind of way. Adding trillions and trillions more dollars, potentially, to the national debt. Putting the taxpayers at risk on a shaky mortgage market. Because the problem is, the houses, the homes, have become too expensive for a lot, or actually most, the average Americans. It's become too expensive. They've gone up too fast, and their value is not holding up. Actually, home values are dropping. The whole economy is in trouble and is dropping. And there's more about this. This is connected to more things than they're talking about. The economy is in a lot of trouble. The U.S. economy, and actually all the world's economies. They're looking at a worldwide recession, and eventually, perhaps, a worldwide depression, because the world's economies are based on false assumptions. They're not right. They're not the right economies. Something's missing here. And, well, there's more to this. It meets the eye. There's more to this picture. These are signs of the end times, transition days. And yes, there are many, many signs. There's something wrong with the U.S. American economy. And these are more signs.